Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a great and amazing day today. And guys, boy, do we have some news today. We are going to be talking about, is the stock market crashing? What is going on? A lot of people have been freaking out lately, and especially today because some crazy news came out. So we're going to be breaking down that. So I hope you guys will enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. If you guys are new to the channel, new to the team, we talk about everything money, stocks, money management, trading, investing. So subscribe, join the team. So honestly, let's just jump into this. All right. So as of today, the Federal Reserve came out and they gave an announcement. Anytime the Fed gives some sort of announcement, what tends to happen is the stock market either skyrockets up or it gets absolutely annihilated. And that's kind of what we saw today. The S&P 500, the Dow Jones, and NASDAQ, all of them fell about 1%, which might not seem like much, but for a large index like the S&P, NASDAQ, Dow Jones, this is millions upon billions of dollars that is lost. Now, the Federal Reserve came out and pretty much said this, that the Fed declines to hike interest rates, but rates are staying higher for longer. So anytime you have this type of announcement, you're gonna have people get scared, get worried, because pretty much why the Fed increases rates and keeps them higher is to slow the economy down because of inflation. I think we all know, a couple years ago, everybody was getting money. Stimulus, they were giving a lot of grants, student loan grants, and that money comes from somewhere, and we're paying for it now because of interest rates. Interest rates are extremely high, and with that being said, you can't keep high rates. The Federal Reserve increases rates to cool down inflation. And that's kind of why they do it, is to slow down inflation. People are less likely to spend money when interest rates are higher. A couple years ago, a car loan was 2-3%. Now it's 7-8%, which is crazy high. Now, answering that main question of should you invest right now, that's everybody's main question is, Carter, is the stock market going to crash? I am not a fortune teller. Unfortunately, I cannot read the future. But one thing I can do is history does tend to repeat itself. Looking in 1970s where we saw, a very similar economy where the US Department, the Federal Reserve, all of them spent millions upon billions of dollars in the Vietnam War, that money came from somewhere. So in the 70s, everybody was paying for it. We saw high inflation. We saw high interest rates. And did the stock market crash? Well, not really. What it did is it was just more of a flat market. It really wasn't going up and it really wasn't going down. It was more just consolidating. So for me, I do think we are due for a possible correction where that's just where the markets fall about 10%. The crash is 20%. So I do think we're due for a possible correction. And realistically, if you guys are a long-term investor, you shouldn't be worried about this. Honestly, I hate to say it, but everybody that cares about these day-to-day prices, you honestly just need to look 5, 10, 15 years in the future. Just because if you're trying to trade the markets, I get it. But as for 99.9% of you, that all you care about is your long-term investment, you care about your 401ks, maybe your IRAs, honestly, don't worry about it. Over the past 90 years, through all the ups, through all the downs, the Great Depression, the dot-com bubble, the 1970s, the 2008 crash, the stock market, the S&P 500, has had an average return rate of about 10%. Meaning if you guys just consistently invest, no matter the time, you're up on your money. If you would have invested in 2007, right before the 2008 crash, guys, as a long-term investor, you're up handsomely on your money right now. If you invested in the most recent crash, in 2020, you're up handsomely on your investment. So I think it all comes down to time frame. And for me, I'm a long-term investor. So yeah, the Fed is keeping rates higher. That's completely fine. I don't get shaken out by these day-to-day moves. And honestly, if we get a crash, I prefer that because I can just buy stocks, ETFs, indexes at just a more affordable price. And it's just a better investment, trying to buy these companies at a lower price. You want to buy low, sell high, not buy high, sell low. So honestly, sell off, I would prefer it to, because then I can buy these ETFs and indexes at just a more affordable price. So that's what's going on. Federal Reserve as well is reducing some of its balance sheet, especially bonds, which may have a little greater effect on interest rates. So they may go up a smidge, not much, but just a little smidge, but we'll see what happens with that. And yeah, that's pretty much it. That's what's going on. I hope I explained this well. And if I did, hit that like button, subscribe, and we'll see you guys in the next one. Take care.